Right, that's L&T Construction getting another order. It's been 3 consecutive days of L&T reporting orders. We will have to check out whether this will be counted in the FY13 order book, but that's 256 million dirhams of orders that they have secured from the Abu Dhabi airport. That's the L&T stock, not doing much at this point in time. Let's shift focus to personal finance. Harsh Roongta of apnapaisa.com joins us. Harsh, thanks a lot for joining us. Well, one common mistake that small investors make is to invest in a rising market, thereby obviously reducing their returns. What's a good method to avoid falling into this trap? How can value investment planning work?
See, I think as you rightly said just before the break, I mean, a systematic investment plan over the long term helps the investor to do rupee cost averaging. When the market is down, you get more units. When the market is up, you get less. A value investment plan goes one step further. Rather than investing a fixed amount, it forces you to invest more when the market is down. Okay. So not only that you get more units, because you invest more money, your overall return is higher, and reverse too. When the markets is doing better, it forces you not to put in money. In fact, if you follow the pure value investment planning principles, you should also sell. But typically, practically, when it is followed, most people would put the minimum down to 0 rather than put a sell order. So I think simply if you follow it in a disciplined manner, you will just let it run its course. It forces you to invest more when the market is low, forces you to invest much less or even 0 when the market is high, and thus in the long term gives you a great return.
Okay, so that's the view there. We have a caller who joins in. Just before that, it's a $256 million order. Okay. So that amounts to about 1,300 crores or so. So that's another order that L&T Construction has gotten. And there's a sudden spike up that you're seeing. The project will commence in April. It has a construction period of 28 months. So that's the latest in its order win kitty. We have a caller who joins in now. Zishanur Rahman calls in from Kanpur with his query. Hi, Mr. Rahman, what is your question?
Hi ma'am, my question is I want to invest around 50,000 a year, and I want to know about some policies that I look for, so that after 25 to 30 years, near about my retirement time, I will have a good amount so that I can use for my retirement plans.
Okay.
After retirement, so that I can use that.
Sure. Can I just ask you, what is your annual income per annum?
8.5 lakhs.
8.5 lakhs. Okay. Harsh, these are the details that we have. He's 27 years old, 8.5 lakhs is his annual salary, and he wants to invest 50,000 per annum.
So Mr. Rahman, I think clearly you must invest with a goal in mind. In your case, it is retirement. If 50,000 is the figure that you are talking about, and given that you are young, I think you should at the current stage put in a bulk of your money long term systematically into equities. If you have access to expertise, then you can probably put it into a large cap fund, but keep reviewing it. A large cap fund, 90% of the money I would advise you to put it in a large cap fund on a systematic basis, something like a Franklin blue chip or an ICICI focused blue chip. If you do not have expertise if you do not have access to expertise, maybe you can look at an Nifty index fund, so that you don't really have to keep reviewing the performance of the fund. 10%, so roughly 3,800 into this index fund, roughly 300 rupees in a public provident fund. Just remember, even over 30 years, assuming fairly aggressive returns of 14% and 8.7%, this will total up to about 1.77 crores. But in today's value, if you take 8% inflation, it is just about 17 lakhs. So clearly may not be adequate for your retirement kitty. It's a good plan. Go ahead and invest in this manner, but I think you would need to supplement it if this is what you want to build your retirement kitty with.
Okay, just one more word, Mr. Rahman. You will notice that Harsh Roongta has not used the word policy. When you framed your question, you asked which policy you should buy. Please don't confuse insurance and investment. Very clearly, Mr. Roongta is asking you to put in equity mutual funds or in Nifty funds, funds which track the Nifty, ETFs as they are called. That would be perhaps 90% in equities and 10%, as he says, in PPF, which will give you a debt return of about 8.5% a year. Thanks a lot for joining us, Mr. Rahman and Mr. Roongta. Well, the summer is here and I'm sure everyone will be planning their holidays. If you are, then do remember to join us. At the same time, tomorrow, Harsh Roongta will tell you what to look for in your overseas insurance packages.